Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and you can see, just looking back, you can see the compression that was going on here and the expansion downward, down to 1831. We had a bear market rally that was sold. We came back down into the 1898 area, and then over the course of last week, on the 2nd and again on the 4th, we established a low in the 1907 area. That has acted as a floor through the holiday weekend. We had a big move up yesterday, and we're seeing follow through today into the area of the mid band. We've traded as high as 92. That's backed off, in some cases as much as 10 points. And so right now we're in a battle over the middle band. Middle band comes in at 1983 even at the moment. So as we head into the regular session, what's important for me is how does the mid-band interplay with where we open? Are we making higher lows or lower highs? I've cautioned my folks against trying to do anything really multi-day, longer term on the short side, simply because this is the week of the roll. We're rolling from the September contract into the December contract. And what we've seen for the last few years is we tend to walk up and they tend to squeeze the shorts up into the roll. So it seems very juicy to short. It seemed juicy to short yesterday. It certainly seemed juicy last night. But what we've seen here on this 5-minute chart over the course of the last couple of days, you've got your weekly pivot here at 1935.90. You have your monthly pivot here at 1969. The jumping off point for the Europe Open early Tuesday morning was weekly pivot. It retested the area here around 44. Then it made the move during the course of yesterday's regular session up to 69, which is the monthly pivot for September. That was initially resistance. It was able to jump over that early in the evening last night, establish it here as support, and it hasn't looked back since. So for all of the noise that the bears have made in the last couple of weeks, what we've seen in the last couple of days is the conversion of two key longer-term pivots from resistance into support. And if the bears hope to regain control of this tape, and they haven't officially lost control of it yet, we haven't closed above the mid-band, and we haven't closed above the 200-day exponential moving average, which sits, right around 2043. But in order for them to avoid that, they're going to have to retake the monthly pivot at 69 and retake the weekly pivot down 35, 36 and go back to work on the 1907 floor. That's a pretty tall task. And what we've seen the last few years is the bears really haven't been able to try to accomplish that task until we get past the roll. So my lean is bullish for the rest of the week, and then we'll see how price reacts as we head into early next week. Okay, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast, and I'll be doing my weekly webinar after the close on Thursday. Trade them well, everybody.